Welcome to it right here at the JSC. Lots to discuss for today. We're going to be looking at Capitec's results. You may have seen that interview that I did a little bit earlier on with CEO Gerry Fourie. They seem to have done pretty well. Of course, the digital aspect of it helping them increase client numbers, even though we are in a pandemic. So we'll discuss all of that with our market watcher for today. We'll also talk about the US inflation numbers that are set to come out, why that figure is important, and also touch on those retail figures out of the US that are expected on Thursday. But before we get to all of that, let's have a look at what happened on the Asian front. Stocks on that side performed a bit of mixed. If you look at what happened in Japan, looking at the Nikkei, that was up 0.7%. Mainland Chinese shares, of course, they closed mixed as well. Shanghai Composite down 0.4%, and its Shenzhen Composite down 0.25%. Over in Europe, stocks inching a little bit higher, and of course, everybody is waiting for that inflation number. And of course, the numbers coming out of the UK, GDP growth growing 0.4%. Missing economists' expectations. But if you look at what's happening on the US front, looking at the stock futures, they were little and unchanged as well. Again, investors waiting for that US inflation number. That entire picture, that entire performance seemed to have also impacted the JSC, even though we did have those Capitec numbers coming out. But just touching a little slightly on it, we had gold down 0.25%, platinum down 0.4%. But we'll unpack that in a bit more detail with Nesson Nair, who is the portfolio manager at SES. Nesson, thank you so much for your time this afternoon.
Yeah, good. It's good to be here.
So, I mean, big news story, well, for me, has to be Capitec, and I'm sure you've looked at those figures. What did you make of them?
Yeah, I think a lot of us, Tasha, are looking at the banks very, very carefully now, especially because we've had a much longer sort of lockdown than anticipated, and it seems like the consumer health is taking a little bit more longer to recover. Of course, Capitec sort of deviated a little bit from the standard thesis. We had, all the big banks come out so far, and I must say the results have been very uninspiring, largely because of the huge levels of provisioning that they've had to do, which is basically eaten away at profits. And Capitec, it's not dissimilar, but I think Capitec, for me, the highlight was that the vast improvement we've seen in the last 6 months. They're now close to 15 million customers. It must make them, one of the biggest banks in the country, if not the biggest, assuming those are all active customers. And of course, they went through a fair amount of detail talking about them certainly being the biggest digital bank in the country. I don't know how FNB will feel about that. But certainly, in a sector that I think largely remains in value territory from an investor's perspective. These stocks really haven't recovered as much as we would have anticipated that they should. I think Capitec's results were really quite impressive.
I mean, let's keep to the same theme. Today, tomorrow we are expecting US earnings to kick off. We're expecting the banks to lead the charge. I mean, to what extent do you pay attention to the banking numbers on that particular side?
Yeah, I think it's a valid point. I think it will set the tone, generally for financials, not just in South Africa, but even in the US, the banks remain in value territory, and lots of analysts are talking about a big recovery in bank stocks, especially with the stimulus that's been offered and the sort of the consumer programs that are being put in place in the fiscal stimulus to be able to address the huge problem that we have with unemployment. So I'm not so sure. I think it's always interesting to see how the banks come out. Of course, the last quarter we have had very good returns in the stock market, and not so much on the bond market, and that tends to affect banks' earnings one way or another, depending on which bank we're talking about and to what extent they had exposure in either of those markets. But it's going to be a very interesting quarter, I think, and certainly from the investor's perspective, some key information to look out for in terms of banks' exposure to the consumer side of the economy there.
So we have the U.S. inflation numbers that are set to come out today. On Thursday, we have U.S. retail figures. How important are those figures for investors right now?
So I think the Fed would like to see a higher inflation number and potentially a higher retail number. But, I don't think that the sort of lockdown, COVID-19 lockdown is necessarily going to, allow that to be seen. I think inflation is still very anemic, especially in the developed world. There has been a recovery in oil prices. And until we see, a full sort of return to normality, I don't think we'll see too much of inflation, even though, we've seen some of consumer price or rather commodity price inflation in the last 12 months. I've just seen a report now come out that the Johnson & Johnson vaccine may actually be stopped because of concerns around blood clots. So I don't know how that's going to impact markets as well, on the verge of the result season coming out in the US.
Right. Speaking of results season, we talked a little bit about the banks, but I'm curious to know which other companies do you keep a keen eye on when those figures start coming out?
So I think, for me, obviously the last sort of year has been all about the commodity companies, all the commodity companies, and I include oil in that because let's not forget, Sasol had a fantastic recovery. Although, it's more than just a recovery in the oil price, I know, but its recovery is still, one of the greatest success stories, I think, 2020. But, the likes of Bulletin, Anglo's, Kumba, all the big commodity companies, the platinum, the gold companies have done phenomenally well on the back of stronger, commodity prices. So between them and Naspers, I think they've helped push the index close to 70,000 actually. And what they've left behind is the property companies, the insurers, some of the retailers, which are only recently recovered, and the banks. And I think for me, that represents, a good area to start sifting through to find sort of hidden gems that could potentially recover, when we're completely out of this pandemic.
Before I let you go, one piece of news you'll be looking at for the rest of the week outside of the inflation number and those retail figures.
Yeah, I think, for me, this news around the Johnson & Johnson vaccine that's just come out now is probably going to be top of my list. Any sort of concern around the efficacy or the safety of vaccines, I think is going to have a huge impact on sentiment. We basically priced in the market, that we're going to vaccinate our way out of this pandemic. And if there's any threat to that, then I think it's something that the market, will reverberate on. So let's just keep a close eye on that story.
On that note then, Nesson, thank you so much for your time this afternoon. That is Nesson Nair, who's a portfolio manager at SASFin, taking us through what we can expect for the rest of the day and, of course, the rest of the week. That's it from me.